The government's call to the big banks to pass on the full interest rate cut has fallen on deaf ears. The Commonwealth Bank joined its competitors with a partial 40 basis point reduction, and Westpac is making no promises as it released its half-year result. Here's finance correspondent Philip Lasker.
Another bank fell into line today, but not with the government. The Commonwealth Bank dropped its variable home mortgage rate by 40 basis points, while Westpac remained silent.
Look, I'm really going to deal with rates tomorrow rather than today.
So the league table looks like this, and nobody's expecting Westpac to break ranks and pass on the full cut.
Well, in PR terms, that would be a stunning move. I think it unlikely, though, particularly given the pressures we've seen on their funding base in today's result.
And at today's profit announcement, the Westpac chief warned the rate decision would not hinge solely on the Reserve Bank's move.
The biggest factor overall is the price of retail deposits.
Westpac is hurting, and it's really because of the higher funding costs that it's experiencing.
The performance of the St George Bank was also disappointing.
So we've reduced the overall reliance or exposure to commercial property, and that's had an impact on lending growth within St George. I think we're largely through that.
Half-year net profit fell 25% because of one-off factors associated with the purchase of the St George Bank.
It's been a very volatile environment over the course of the past 6 months, a low growth environment and intense competition.
And Gail Kelly is trying to shift the bank's focus from a lending culture to a deposit-raising culture.
Customers should find that when they go into branches, the Westpac people would be more interested in talking to them about deposits than loans.
But attracting deposits doesn't come cheaply, and that suggests funding cost pressures down the track. Philip Lasker, ABC News.